If you're a business owner, you could be missing out on lots of tax saving opportunities. So let's have this video to explore a lot of the common mistakes that small business owners make that could be costing you thousands. Hi, I'm Michael from MDH Accountancy. Click subscribe to see all of our videos to help your business grow. Most business owners don't realise that there could be stuff to save on your tax bill, but you may already be in a position where you're taking all of these savings now. So let's follow my video and let's see how many of these tax saving opportunities you are making the most of within your business. Capital allowances on equipment. Now for most equipment, which is a fixed asset which lasts more than 1 year, you get tax relief in full on year one. The main exclusion for this with small businesses is a car, where a car you only get a little chink each year, which is written off against profit, and you get most of the profit on the end with a car. But what we see time and time again with new clients that are coming through the door is their assets are being purchased within their business, they may not even be recorded, and the full capital allowances has not been claimed. Please make sure you are not missing out on this opportunity. Employment allowance. So currently the employment allowance is $5,000. That means in layman's terms, if you've got employees within your business, you won't pay employers' national insurance for the first £5,000 for any year. Next tax year, this is going up to £10,000. So if you're paying employers' national insurance for your employees, the first £10,000 you get as an allowance where you don't then have to pay that employer's national insurance. I am absolutely gobsmacked. Potential new clients that come through the door that have got salaries and they've got team members are now not claiming this allowance. It is frightening. Losses from previous years. So if you've made a loss for corporation tax in the prior year and you don't utilise it at all, you are allowed to carry that against future profits in future tax years. Again, I've been amazed on some companies that have been loss making and the losses have absolutely disappeared, which means that they're paying tax on future profits. What a waste is that? So if you have got losses within your business and they're not utilised, please make sure that you're carrying them against future profit. This to me is really basic. Dividend optimisation. The route of tax planning has changed a lot, where before it used to be salary and dividends. The big one now for me is salary, interest on your director's loan account if the business owes you money, and then dividends. Now the thing to be careful of as well, if you've got other income, which could be you may have some buy-to-let properties in your personal name, you may get some interest that's outside of an ISA. So make sure when you're optimising your dividends, which are normally almost at the top slice of income, you are pitching yourself at the right income level where you want to be. And normally that's around either 50,000, 100,000 or 150 and above. So make sure you are absolutely utilising your dividends, because I'm amazed the amount of potential clients that come through this door, and it is average. Pensions have never ever been more exciting, because if you're involved within the business and you're a director, you can make pension payments up to £60,000 a year. 60,000, that's a colossal amount of money. But also, you're not just saving the corporation tax at 25%, you're also saving the higher rate dividend tax as well. So on the tax going inwards, you're making over a 50% tax saving. That is colossal. Now, I understand that you have tax to pay when you take it out, and in future tax years, that's going to actually come onto your IHT calculation. But if you're immediately building wealth and you don't need the money within your business to scale and it's sort of sitting there, or maybe even you've got a cash account, what a wonderful opportunity you've got to take money out of a pension, build wealth further on HMRC tax up front. I know that I would be jumping on this within a heartbeat. So how much are you using pensions within your business, and could you use them better? Business assets disposal relief. There's a lot of criteria to cover here, and that's not for this individual video. But if you sell your main trading business, which doesn't mean an investment business, to most small businesses that's going to be a buy-to-let company, you will be able to pay 10% in tax on your first £1 million worth of gain. Now after that, it will go up to an additional tax rate. In the current tax year is 20%. In the future tax years, it's going up again with the most recent budget that we've had. Have you claimed or sold a trading business and not claimed business assets disposal relief? Again, I am baffled when we have potential new clients come in the door where this hasn't even been a consideration, and it's an opportunity that's massively missed. Now, one thing to bear in mind, once you've made that total gain of £1 million, you're done, and then it will go on to standard CGT rates. But if you're looking at a difference even on the current rate, 10% of £1 million is a big chunk of change. So if you sold your business, have you fallen into this trap and not claimed business asset disposal relief? One of my favourites is missing expenses that are paid personally. So it's dead easy as a business owner. You're really busy, you may not have your business card and you put it on your debit card, or you may even pay for it in cash and there's a receipt, you go, I'll sort it out later. They end up going into a black hole to never ever be seen again. That money has come out of your personal bank account or your personal credit card. So that means that the expenses have disappeared, which means that you're then paying high rate dividend tax on that amount, and you're also paying corporation tax on that amount. So all of the things that you're buying for cash out your own pocket, are you claiming for use of home? Are you claiming for every genuine business expense that you can do that's not being picked up by the bookkeeping system because it hasn't gone through the bank account, the invoice hasn't gone into the bookkeeper, and or it hasn't gone on a business credit card? So make sure that loads of precious tax relief are not slipping through your fingers, which ultimately increase your personal tax at the same time. Please make sure that you never, ever fall into this trap. I hope this has been really interesting, but if this has spurred some further questions, jump on a discovery call with me below. Half an hour chat on Zoom. I promise there'll be no pushy sales pitch, and I'll just be there to help. If you're also looking to save tax, click on our book below. This is 70+ ways to pay less tax. Every one of them are good, and every one of them are a potential opportunity to save tax. Even better, the download is completely free. Enjoy.